Good morning, everybody. Welcome to Friday. Welcome to the Flow Show, 21st of June. Hope you're doing fine and dandy after all yesterday's big events. And yes, I'm mostly talking about the football. Morning, Kate. How are you doing, sir?
Good morning, Ryan. TGIF. Good morning, everybody. I'm doing all right. Yeah, I guess it's Friday. Should be happy. Summer started, so we have another 2-3 days to enjoy it. So yeah, we're all good and positive.
Yeah, I forgot. Longest day of the year, and it all starts getting darker from tomorrow.
Yeah.
2 minutes a day, it gets darker. Oh well, so much for summer. Sun's out now anyway, so like you say, make the most of it while it lasts. Right, let's have a look at what's going on around the grounds. Over in China, PBOC set their rate at 7.1196. That's just only up 4 pips from yesterday's reading. So still keeping the foot on the brakes a little bit over there while we watch what CNH is doing. Bit of data over in Japan, CPI data. And it's looking generally okay. Headline CPI up at 2.8%. Some expectations had that at 2.9%, so you could call it a miss. The direction is more important, though, up 3 pips over last month. One of the cores there, you can see missed expectations by a pip, but again, it's another solid rise. One of the other core measures, though, went down. The ex-fresh food and energy number came in at 2.1% versus a prior 2.4%. So that wasn't such good news for that core number. Still, we've got inflation above target. That's what the BOJ will take from that, and those other measures rising too. Hopefully, it's broken the weaker numbers that we saw in Q1. They'll be hoping for that as well. As you can see there, the PMI is coming out as well. Manufacturing going backwards, was expected to rise and it fell, and services have gone back into contraction by quite a hefty chunk from 53.8 to 49.8. So not looking too good over there. They're not going to be too worried about those inflation numbers. Okay, it's better than they were.
Yeah, it didn't really have too much of an effect, right? Just a tad JGB yield higher, but nothing really to write home about. It hasn't changed anything for the yen, so I guess we're still waiting for what the Bank of Japan and those people they are going to meet with are going to decide. Moving on, I say.
Yeah, nothing to see here. There was a quite a decent comment from BOJ's Uchida saying that the BOJ will decide the specifics on bond tapering plan, and the size of their reduction in bond buying will likely be significant. That's perhaps a little, one could call it a bit of a hawkish comment because that might go against the slow and steady approach that we would expect from them. Not that UT matters that much from our central banks.
That's just a repeat of what Ueda said on the Bank of Japan meeting. That's exactly what they said. Reduction will be significant. That's exactly what they said. So it's a repeat. But as you say, it's keeping the hawkish side of that alive. Let's put it that way. And then now the market says, well, yeah, show me the money.
Yeah, exactly. The market's not bothered at all about that. But yeah, it goes in line with we've had these several comments about the possibility of a July hike being on the table. We've had Ueda pumping that a couple of times as well as some others. So it looks like July is going to be when they either go with rates or they at least give us the full details of their QT. But as I said, QT has never been a big price mover for a lot of central banks. I doubt it's going to be one for the BOJ, but we shall wait and see. He also added that the economy is recovering moderately, albeit with some weak signs, and the underlying inflation is likely to gradually accelerate. Over to the BODs at the ECB. ECB's not followed up with his comments yesterday, saying he backs 1 or 2 more rate cuts this year. One of the big doves, Centeno, says, let's leave all the options open on July. Over in Spain, they're going to be appointing a new central bank chief before the July ECB meeting. That's after their head, De Cos, left a couple of days ago. So they're looking for a new bod there. Coming over to some of the data, we've had all the PMIs, as I said, coming out this morning. Some UK retail sales, which really did sort of blow the doors off. Headline number coming in at 2.9% versus 1.6 expected and down 1.8% previously. That was a higher revision as well. Sales ex-fuel also looking strong, 2.9% versus 1.3% prior. Now, obviously, we had some really crappy retail sales in April, so this may just be a bit of a snap back from that. They were quite significant falls, so it doesn't take too much to improve on that. Let's see if there's a trend that comes out of it, depending on the weather, which so far hasn't been all that great, but it's not been all that bad. We'll see what sales are next month, but those numbers there look a bit better than what the actual situation might be on the ground. So as you can see from the quid, no one's rushed into take the pound high after that. I think it went up about 20 pips on the numbers and fell after that. Rest of the PMIs coming out. France letting the side down again. We've seen negative numbers for those guys in both components. Manufacturing falling back again. Services falling back again. Green shoots look well and truly dead at the moment from there. Germany, same thing. Manufacturing, big loss back to 43.4, was expected to rise. Same with services as well, was expected to rise a bit, went backwards. The main Eurozone numbers reflecting that as well. It was catching in the UK, slightly different though. Manufacturing went up 2 points, services came down. So that's more of a negative for the quid, because services is the bigger number there. But again, the pound had a little bit of a wobble, but has recovered a bit since then. We'll go back to the Bank of England that dropped yesterday. Bit of a strange one. We got a unchanged headline as expected. 7-2 was the vote, which on paper would have been at my least dovish side of the scale. But then it was picked up in the minutes that some of those 7, or a couple of those 7, were very close to changing to a cut. And that's what the market read out of it. So it might have been on its own, it might have been a number that would have sent the pound higher, but reading that it was a close run thing has got everyone rushing their expectations back into August from September and later on in the year. So August is now firmly in the crosshairs for that one as well. I think that's probably about right, depending on what happens with inflation that we see. We're also now pricing, or fully pricing, 2 cuts. We're at something like 44 basis points for the rest of the year before the CPI. That went to 47, I think. Now we're fully pricing 50 pips of cuts by the end of the year. We shall see when and if they do. Anything you picked out from the BOEK?
Well, I think we sorry, we all had a bit the same idea. Was that the 7-2 would have been, as you say, the least dovish, and we're all a little surprised about the initial market reaction there. But yeah, yes, I think August is indeed firmly on the table. If it was such a fine line decision for a lot of those Bank of England bots. Anything else to pick out from it? If you look it in conjunction with today's numbers, which are coming back down, I think it's probably right to expect a rate cut now sooner. But on the other hand, uh, if you look at then in terms of currency pairs, I don't think it's a reason to go and sell sterling versus various things, especially. I wouldn't say the euro sterling you shouldn't be buying. I think you shouldn't be buying euro sterling because in Euroland the green shoots are getting absolutely destroyed right now. Um, it's a tough read for me. I bought sterling Swiss yesterday, then I let it go last night. It came down, and now it's back up. And it's I don't know. It's a bit of a difficult read right now in sterling. I said yesterday, actually, even before the BOE, I'm not going to be really in a hurry. Or I don't have like a very big bias on sterling. And to be fair with you, it hasn't really changed. I'm a little bit. Wet finger up in the air to see what could or not happen to sterling right here and now. We are a bit lower. We are on some support in the cable. So it's I guess it's over to what the US PMIs are going to tell us for what the cable is concerned, and the rest of the currencies. Yeah, I know I can't see a firm trade in there in the sterling right now.
Yeah, no, exactly that. I was long euro sterling, and I was going to hold it, and then I was looking at it thinking, no, I'm bang in the middle of the range here. Yesterday, 84.50, so I chucked it out, and it was only costing money sitting in it. And as you can see, done absolutely naff all really. So yeah, I'm back in neutral road. At the very most, I might try a little scout down here into the figure, but other than that, yeah. Same for cable. I don't know if you pips this morning trying to bite off this level here. Got ticked out of on my stop just below, so I'm out of that one as well. But again, it's just yeah, I'm a bit neutral. We're just waiting for better levels to turn up. I think that's the way to look at it. Right, let's look at some of the rest of the data. We had some data obviously out from the US yesterday, some few bits and pieces. Jobless claims were okay. Yet again, no worries there. 238. Continued claims still in at 1.8 million, so nothing to write home about there. We did get some soft housing numbers though, and this is another. Well, I think this is the third month of negative numbers or softer numbers for housing starts, which is the most important component. This is when you actually stick a spade in the ground rather than getting permits. So it's the third month in a row. So another one of those little yellow flags is waving a bit faster on this. It matches or comes on top of the NHAB the day before that was softer as well. So we are looking at the potential for some housing market weakness in the US. Now I'm going to match that up with a conversation we had in our chat room with some of our Yank mates. Who were saying a lot of people, they're seeing a lot of people who are not moving home but are extending, building, parts to their houses for in-laws and the likes. So they'd rather do extensions and scale up their own property than moving, because if they're moving, it means they're going to need a new mortgage and they'll be mortgaging onto a higher rate. So if you've been in a house for 10 years, you're probably paying a nice low rate. You don't want to suddenly go from 1%, 2%, 3% all the way up to 6%, 7%. That's the sort of thing I've been waiting for months now, really coming into 2024, just to see signs of these higher rates affecting certain parts of the economy. And it could be that we're just starting to see it coming into housing. I always love getting boots on the ground views from people in different places. And yeah, just the evidence is starting to mount up. Just a question of whether it's going to be soft landing or whether it takes a dive. And depending on that, will define how the market trades the Fed rate cuts, whether they ramp up on sooner cuts or keep the higher for longer rhetoric. So all these little bits of data points, we've been talking about them for a while now, these little yellow flags, if they start waving louder or waving faster and getting bigger and turning red, that's when I might be interested in getting in some dollar shorts. But a situation that needs monitoring. Fully Fed manufacturing, another one, came in softer. We've got the US PMIs later today. Some of the numbers there a little bit mixed as well. Employment improved, but still a negative. New orders improved or less crappy. Prices paid went up, so that's the inflationary impact there as well. So a few mixed numbers there. Anything for you over the US data, Kate?
No, a lot of lot of noise around those claims all the time, but
Yeah,
I mean, really, they are like whether it goes up 20 or down 20K, it's not that is going to change. Actually, one could argue that it's not yet showing the jobs market ready to completely fall out of bed. Those housing, yeah, that's what I call those yellowy flags, perhaps. But again, I mean, the thing is of late we are not trading this housing market. It's like fashion, you know. One season you're wearing something, the other season you wear something different. This is how it goes with data as well in the markets. And that's not the big focus right now, but it could become one. If you add a bit of a weakening jobs market, for instance, to this housing number, and actually then the housing market could actually decelerate further. That is then going to be a one that the market is probably going to look at and say like, hey, remember, we saw warning signs, right? But right now, it's such a no. I don't think it's I didn't take much out of those data anyway.
yeah, no, I agree with that. But yeah, that housing number, I'll be keeping a close eye on. It's a weird thing. It's a very weird situation at the moment with all this. You know, if things were normal and I was starting to see stuff like that and all these yellow flags, I'll be looking to build a position, a short position in the dollar. But everyone else is looking just as or crappier and getting crappier. It's like a zero-sum game at the moment. That's a difficulty. We're trying to pick a trend in all this. But if things do start to take a bit of a nosedive, the dollar will go harder because obviously it's the biggest currency that everyone trades. And just like when it strengthened significantly in the hike cycle, it could do the reverse on a cut cycle if that cut cycle is sharper than the market's expecting. But anyway, something to keep an eye on, and no doubt, as we'll keep you updated as we go along. Over to the Fed heads, Cash and Carry said it will probably take a year or two to get inflation back to 2%. That's not a comment for the doves there. Wage growth might still be a bit too high to get back to 2% right now. Fed Schools Beast said that if we see more good inflation reports, we can cut. Didn't say how many though. Says don't need to see annual inflation to hit 2% before a rate cut. Says that the Fed's 2% inflation target is a sacred vow. In other news, FX-related news, the US dropped their latest FX trading partners report, where they have a little review of who's messing around in FX. They added Japan to the monitoring list, obviously after their intervention, but said that their recent intervention had been orderly, so they're not overly concerned about that, but Japan go on the watch list. You may recall in May we had a few countries, US, Mexico, Canada, shifting to T1 settlement. Well, US Secretary head or the SEC head is now pushing others to move faster on getting their currency settlements to T+1. Apparently, the UK is debating the transition to the faster settlement. That'll take another 20 years if the UK are debating that. In other political news, Mexico is getting a new economy minister, Ebrard, and he's going to look to renew the USMCA trade pact. He's probably going to have to wait to see who's in the hot seat in the US before he does that. Over in France, another poll out has the Le Pen party ahead with 35% of the votes. This new left coalition thingy in second place with 27%, and Macron running in third with 20%. So the gamble's still looking like it's going to be a bust for Monsieur Macron. But let's see what happens in the real voting. That's all I have. Anything else from UK?
No, not on this Friday, mate. It's been relatively quiet in the markets. The only thing that caught my eye earlier is that there seems to be a couple of smart cookies who are trying to place decent bets on much earlier rate cuts from the Fed than the market expects. And that was a bit of a Bloomberg article this morning. And it's interesting because, you know, yesterday and the days before, I already said, I think the Fed is walking on a smaller ridge than, or on a more narrow ridge than what the market is now expecting, in my opinion. And well, I'm not saying that they are going to cut as early as those guys are betting. This is casino, right? But I must say that the idea behind it is something that I'm actually flirting with, because, as you know, Ryan, yesterday I asked in the room as well a question about what would be a decent currency or instrument to be long off against dollars in case the market is wrong in its assumptions that that the Fed is going to wait until what is now December or so to start cutting. So I think that I found this bet, I mean, just interesting. That I may not be the only one thinking that they may have to go much earlier if they don't want to cause or start to cause more destruction in the market. So that I just found interesting to mention. But for the rest, it's been extremely quiet. Yeah, that is it. Quiet.
Yeah, no, I think that's an interesting point. You know, it's as I've been saying for a while, we keep coming through these meetings, the data keeps saying one thing, the Fed keeps saying another, and it's a game of, it's a Mexican standoff or a game of chicken, and something's got to go one way soon, because we can't keep seeing this weakening data continuing, and the Fed keeping the message that they're going to keep rates high. It's not going to compute. It's going to come to a head at some point, whether that's September, November, December, who knows? But it is going to be resolved one way or another at some point. Right, let's have a quick butchers. Ali, you had a nice short on cable, and you're now long. Not overly keen on your risk reward on that one. Oh no, sorry, you got 16 pip loss and 55 gains, so that's okay. You stopped just above the current low, so you might want to think about that one, just in case you get a retest. But good to see you got the short in anyway. Yeah, as Kay's mentioned, it's option expiry today, so there could be a whole load of shenanigans going on in markets later on. Stocks have come off their recent highs, but they're not dipping back too far. If we just look at the S&P quickly, there we go. So we had the break at a 55, got up to 20s, failed that, come all the way back down again. We got a little bit of an intraday level in here. Same thing we're talking about with stocks that I've been talking about for months since we had the break of 4,800. It's when you're in uncharted territory, you've got to let the price develop. Okay, you've got to see where the levels are showing up. You know, these levels look okay, but they're intraday levels. You know, you want to see things lasting over time. So if you want to still be trying to pick them tops, wait for some evidence. You've got a bit of evidence, maybe another retest of 55 will start to solidify that as a resistance zone and give you an idea that a top is forming. But until you start breaking down some of these support points, it keeps the momentum in play, and that momentum's been pretty strong, as you know. So you just need to wait, let the clock do its thing. The longer a level holds, the more faith you can start to put in it. But we're still talking very short term numbers here. So if you top pickers want to pick tops, then at least wait, like here, wait for evidence where you're going to pick tops, but you don't need to be wrong too much if you do get a break. So yeah, where's the top? Who knows where the top's going to be eventually? It's been going up, as we said in the chat room, for the last 15 years. So picking a top at the moment is folly. Well, not much going on really elsewhere. Euro dollars had a little bit of a break under 107. Couldn't quite get down to those lows that we had late last week. So that might be a bit significant. Not far off though, 4 or 5 pips, but that still can be quite significant because it shows that there's something here that's keeping the price supported. It has been a bit of a prior action area, but just now it's holding up. So we had just a tiny step up off of that prior low, but now it looks like we might be trying to hold below 107. So again, who knows? Get to the US data. If it's weak, we go back above 107 and everyone forgets what happened here. So really back in that situation, you've got to swing with the data punches at the moment. Dollar China, obviously on our watch list at the moment. Yeah, mate?
No, it's fine. I was just laughing, smiling when you picked up on the when you started to show the dollar China, because I was thinking back at the conversation we had in the room about this being your two sons' inheritance street.
Yeah, yes. I was commenting that yeah, as we've been saying, this is going to be a slow one. This might be another one of my lifestyle trades, or our lifestyle trades for this one, because we had a move up, had a little pokey above 729, but now we're down a little bit. We're still holding here. That F.A.C.E yesterday again perhaps shows they're going to let things or let the foot off the brake really slowly, as we may be expecting. Technically, though, while we're holding above this 28 level, and probably more so around this 27s, these prior highs around here, if we're holding above there, then it's all looking good. But for now, yep, slow and steady, it seems, at the moment. Dollar Rand looked a bit worrying. If I can find it, where's it gone? Yeah, so it's going again. Where is it? Can anyone see me, Dollar Rand? Oh, there it is. That's looking a bit iffy again today, Kay. We had that nice move up, but it failed pretty quickly. And now we look to be holding under this 18 level. I've got my stops on my longs at 1870. So that's a bit further down. Any news behind this one, Kay, or we just seeing further easing from the election?
No, I haven't seen anything specific, to be honest, but that was, I thought it was looking a bit encouraging yesterday on that move back above 1810, and but it doesn't, it didn't, and I just, because of the price action, let a lot of my my longs go. It was, well, a lot of it was still a very small position. But I just don't like the price action, and I don't know whether it's paired to risk or anything, but it should not be risk, because if you look at the equity markets, which are trading down, the rand should not have strengthened. So it's a bit of a, I think, a bit of a washout of people's positions. Perhaps I haven't seen anything in particular to support this revival in the rand, but price action is not encouraging right now to hold longs. I'm just putting it in the fridge for a little while and then see if we start to get back above 18 and then hold, and perhaps then reload. But sometimes, you know, it's not good to be too stubborn. So just let it go and see what the market wants to do before it starts to cost real money.
Yeah, no, exactly that. I agree with that. So, yeah, I don't know what to do with mine. I don't know whether just throw it out or maybe we see if we get another rally into the US session. We know sometimes the Yanks come in and like to buy some dollars. So, yeah, I think if we get another test of 18 and it holds, I might knock mine out as well. But yeah, we'll see what happens with that one. Again, I'm not in big at the moment. There's not much I'm in big at the moment, just because of what's going on or not a lot going on. Ali asked a question about pricing. What's price for the Fed? What's not price for the Fed? It's the same old conversation, Ali. We are in no different a position than we have been for several months now. Okay, the market knows all the central banks are going to be cutting. Some have started, some haven't started. All the market is arguing about is the date. So when we're talking about pricing again and what's price, this price, the other price, okay, this is where you come and you look at your wider charts. You go into your, there we go, we'll stick on a 4 hour. This is what we're doing. Nothing. Sideways. 110, 105, give or take the odd extension. Okay, we've been doing that for over a year now. There's your pricing. Okay, that's what the market's pricing. All this stuff in here is just noise between data points, between, you know, one Fed meeting to the next Fed meeting. Okay, if the market was really pricing a significant cut cycle for anyone, then we will be seeing these prices move out of these ranges, but we're not. So your long-term view, the market effectively knows what's coming from central banks. That's why there is no trend happening here. All we're doing is in everything we trade to do with pricing per se for central banks now is just messing around in the short-term stuff. You know, one bad data point means the Fed might cut a bit quicker than September, for example. So we get a move. The next good data point reverses that. It's just the market moving in between. So it's all noise. All this intraday stuff is noise. The main pricing, however you want to look at it, as I say, is you take a longer view of things and see where we are. And the longer view is just showing a tight range, 500 pips, not breaking out of it. Okay, you compare that to what happens when you get real trend moves like this and like that and like this and like that. Those are your big trend moves. Okay, when there's something really happening. Think of it like I've used this before. You drop a stone or a brick in a pond. You know, we had COVID, bang, and we get all this. We had the inflation, you know, and now these are the little ripples that are just happening after the stone's been dropped in. Kate, I'm going to bounce over to you, mate, because I only looked at a couple of bits yesterday.
Let's look at a few things that that are happening, perhaps in the mix. And as you also mentioned, I think Scheinbau is perhaps in a bit of a I don't want to scare the investors too much. Play right now before they decide upon whatever happens later with AMLO, you know. And in the meantime, I was looking at this 35.40 zone in the dollar mix, which was like holding quite well, and now we are starting to trade below. So I wonder if we, on the back of that Everard nomination, he was actually a guy who I think was in the negotiations with the USMCA, right? And also was in some of those projects on nearshoring and friendshoring. So it is a bit of a sign to investors that perhaps it's not going to be as bad as planned. But yeah, so dollar mix is starting to come off a little bit. I wouldn't be surprised, being Friday, a bit like what's happening in the rand, that we see perhaps a little bit of a washout, or a deeper correction. And then I'm thinking about 1820 or perhaps closer to 18, the big figure. We could be heading towards there to close the week, providing that equity markets, we never know what's happening on those big expiry days, but you see those two spikes here that we had before. Was also a low before we reached for the latest highs in the dollar mix around 1820. That's going to be a level to monitor, I think, and then the low 18s around around here. That's going to be an interesting watch as well to see if it then holds and start to move up again. But I'd be a tad cautious on this one, being Friday. because if some species bought against this level, hoping for a return above 1850, they may be a bit disappointed and let it go. And on the Euromex, and that is then in conjunction with those weaker US EU data. Sorry. As we can see, we are on the 38.2 of the post-election ramp higher in the Euromix, and it's also bit of a short-term support line, and that's right where we are trading right now, around 1957. I think if that goes, we could see exactly the same kind of move as we may see in the dollar mix, and coming to rest here perhaps on those prior levels somewhere around 1940, which is a 50% of that ramp higher. So that is something that I'm monitoring, and perhaps just for a quick try, see if we can get that break and get like a percent or so move down. It doesn't show on the picture, of course, because it's a 4 hour, but this is a 1% move, so it's not completely negligible. Okay, so. Perhaps, just perhaps, this is something that may happen on a Friday, unless we get because we do have US sorry, we do have US PMIs as well. Unless the US PMIs are disastrous, then perhaps dollar mix could come off, but euro mix could actually find a bit on the back of lower risk, perhaps. Okay. Yeah, I was going to show the rand, but you did it already. Let's pop. Oh, Marcus, yeah, you have well, I mean, they're not really higher, right? On the dollar, the dollar mix is not higher, right? It is it is lower. So the crosses are also lower, but you can see actually in theory a little bit higher dollar mix, and yet lower crosses if the dollar is really strengthening elsewhere. Like for instance, if euro dollar goes down to 106 and dollar mix goes up to 1850 again, I mean the cross is not going to move too much, because both will have done like a 1% one way or another in favor of the dollar. Then your cross is going to stay where it is. If you get a slow grind lower in the euro dollar, for instance, but your dollar mix stays where it is, or dollar rand stays where it is, then your crosses are going to be de facto lower, right? So it's all the correlation things between one and the other pairs, which are relatively logic. Yeah, gold. Indeed, it's an interesting one. Gonna zoom in a little bit. This was a bit of a trend line that I was watching, but it's interesting because we went through the 30s, then came back onto 2330s, and now we are trading a bit higher. There is a bit of resistance here around this 2368. And first support, and that is something that I'm looking at, is around 23.5. As you can see, we've traded a good number of times in this zone. So I think the first support may be here. This is the maybe a bit of support here, 2350. It's done a quite nice move. I think around 23.5, there should be a bit of support. 2340 is another level, but then we would be talking again about 2330s. Gold and silver, but this time I'm looking specifically at gold, is seemingly one that the market is again relatively happy to hide in case the rest is uncertain. And also, what I've been saying in the room as well is that I've got the impression that if, and that's an if, of course, but if we are right in saying that the PBOC is going to let a gradually CNY decline, CNY CNH decline, the Chinese will likely be pushed into buying perhaps a bit more of this again. This is one aspect. And the other aspect is that we have seen that it doesn't need too much of the whole bond market to creep higher, the yields environment to come off a little bit. It doesn't need much for it to catch a bid again. So I am, for the time being, relatively constructive. And as I said in the room, for as long as we hold those 2330s, I'm going to be relatively constructive on things gold, unless we see a ramp higher again in yields. So that is a bit how I look at it. Also, we have seen a setback. There was something really strange happening just after the close yesterday. Could have been the rolls and things, and I don't know, but something really strange happened on all the equity markets. I don't have an explanation for it, but it's again a fact, and this could, I'm not saying it will, of course, because the market is we never know what the market exactly wants to do, but it could be the case that this is one where safe haven is a big word, but if you can't buy anything else, this could be some kind of refuge to go in again. So I am, for the time being, mildly constructive on gold. And with that, Ryan, back over to you.
Thank you very much, mate. Well, I think we'll call it an early one for a Friday. Good to see we've got football on at 2 o'clock, because I might have to take the place after the US PMI later. We'll have a look at that. Yeah, well, all that's left to say is thank you very much for coming to the Flow Show again this week, boys and girls. Your support is much appreciated. Thanks also, Kate, for all your valued insight as well. Do have a great rest of your day. Have a wonderful weekend, and we'll catch you all up on Monday. Have a good one.